Hey traders, what's going on? Can you hear me? This is Jamie Setley here with the Midweek Strategy webinar. And hold on. And it is February 27th. 1 week ago, we were at all-time highs in the stock market. That's pretty crazy to think about. What a week, says Patrick. Yeah. Pooh just saying no pause even in after hours. I know. So we're going to focus mostly on some of the indices here, and rather than me toggling back and forth between like a million charts, I have them already down in the in my post from today. So, all right, check this out. We've got one. This is the pitchfork back to the 2002 low. Okay. So I will actually hold on. Let me just bring in a different chart real quick. Okay. Because when you zoom out, and I think I've showed this before, I'm not sure, but okay, so the reason I found this is essentially looking at this period right here. Hold on, this period right here, okay? So this down, up, down period, followed by an impulsive advance, okay? Well, it's the same as over here, down, up, down, followed by an impulsive advance, right? Tech bubble, financial crisis. You did have a kind of a depression into the early 1900s, right? And then you had the big run, or sorry, into 1919, sorry. And then you had the big run, the roaring 20s, right? And then the stock market crash. The point being is that these are very similar. So what I'm going to show you are literally, they have parallels to each other. So we have our pitchfork here. This is the current S&P. Now, I took this chart screenshot at 11:43 today, so we're already probably down here. Are we at 29.40 yet? Actually, let me see. We are. Okay, so we're already at 29.49. That's wild. All right, so basically we drop into former highs. Okay, this red line is important. Keep that in mind. We'll look at a zoomed in chart in a little bit, and you'll see what I'm talking about. This trend line here has obviously been broken, but the big thing I want to get across here is that the fact the blowing out through the top of the channel, or the pitchfork, or whatever you want to refer to it as, a pitchfork is a kind of channel, so it does apply there as far as calling it a channel. And then let's go to, so keep that in your mind, that image, right? Now let's go to the Dow Industrials in 1929. Same pitchfork. Okay, it's less time, but the shape is the same. You have this channel here, and what happened was you came down, blew out through the top of the channel, dropped, got a bounce. The eventual crash took you to the center line of that channel, okay, which was a 45% drop from high to low. Okay, so now, by the way, a 45% drop high to low would take you to about 1870. So let's look at the current daily chart. This is the 1929 daily chart, okay? Dropped in the 200-day average, trend line, former highs. You got a bounce that lasted for like 5 days, okay? And then the crash happened, right? There's a period of mini crashes, so like big drop here, back to the center line right here, okay? I'm wondering if that's where we are. This is the daily chart. Again, this is taken 11:45 this morning, so at this point we're already, I think, down near 29.40. We are in the after hours, 29.49 in the futures. So we're not here anymore. We are here. And that's why I also have the NDX chart, right? So if the NASDAQ is the correct market to follow as far as the disaster scenario, right, the crash scenario, then we might not bounce until 81.67 NDX, okay? NDX actually has the same channel as the Dow did back in the 20s. So again, let's go back to that 20s chart. Dow Industrials, 1929 weekly. So this is your perfect Elliott channel, okay? You go off the lows of waves 1 and 4, extend a parallel off of the top of wave 1, and you hit the high. Do you remember this chart from last week or a couple weeks ago or whenever I posted it? NDX Weekly. Wave 1, wave 4, or this can be wave 4, it doesn't really matter. Off of top of wave 1, guess where we topped, right? You do have a similar pitchfork here in which you went above it. In this case, okay, 81.67 is the level. Let's see where we are trading after hours. We are currently trading 83.50. So you would have another, 180 points or so on the downside to even get to that level. And that would put you again right over here. So if you want to see the live chart, bring it in, hold on. It's right here. And here's the important thing about this. You've got the 200-day average there, that same trend line, like the one that you bounced off in 29, and that same, kind of red line, if whatever you want to call it, right? There was support back on December 3rd. So we haven't even gotten there yet. So maybe that's where we bounce. I mean, if we do bounce, this is getting pretty wild. So that's my guess. Crashes right off the top, and as far as like, I mean, you look back in 2018, it looks like a crash off the top, but you did actually have a couple days where you had a bounce. We haven't had anything like that, right? At all, hardly at all. So I guess you could say Monday was something of a bounce, I guess, but we closed low on the day. So again, 81.67 is where I'd look. And then, there's really not much of a need to try to pinpoint resistance at this point. Let's see if we actually get any sort of a bounce first. And if we do, then we'll look at, the next scenario, right, to prepare for what could happen as far as an actual 1929 style crash or something like that. So all eyes on this 81.67 at this point, okay? All right. Indices, the Dow, you might want to watch a level down here as well. This is a trend line here, okay? And that's going to be like, 25,000 or so. Line off of the lows back here. You might want to, I don't know if it takes out these lows over here or not. At this point, you'd be looking at resistance at the underside of these lines here, and that's going to be back up near, say, 27,200, right? So we're just kind of trying to identify levels to have them in mind before things, as things are happening, because you want to have these levels at least nailed down before you head into battle, if that's what you want to refer to. All right, so we got that to look at. How crazy, by the way, is the long-term, like really long-term chart of the S&P? I think I have it over here. Hold on. Yeah, it's this one. This is the one published at the end of last year. I mean, literally, you've hit channels that go all the way back here. So I don't think it's that insane that you could get something of a significant, crash, and then maybe even a very long-term bear market. I'm not trying to freak anybody out, but it's worth considering. I don't think anyone thought we were going to drop this hard this fast either. Okay, getting into the stuff. All right, of course, dollar yen at the very end of the day ends up getting dumped. So dollar yen at this point, I mean, it's a bear, but thought we were going to try to bounce from 109.70. I guess we did. We traded up to 110.35. We had a good reversal. We had a good reversal going today, and then that just failed, like, well, the entire market failed. But at this point, the moves in currencies are still really muted. So from here, it's kind of tough. I mean, the fact that we didn't hold that low, you've got like 108.90, 109 down here on this trend line. You can see it a little cleaner actually if I just pull up like the daily chart, which I also have, I also have in today's post. Oh, I'll finish my dollar yen thing here and then, oh, did I not have it in today's post? Hold on. I guess I didn't. So I have to put it in there. I'm glad I paid attention. All right, hold on. So here you go. So dollar yen, right? Last week up here said might get a fake out. We got one. Eventually you're looking to 105 and change, but 109 is going to be your next level. Look at that 105 area, by the way. It's freaking huge, man. I mean, 105, 40, 50, whatever you want to call it. Boom, 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 boom. Election, Trump. Feel like we're heading right back to that level now. So from here, 109, we break that, then I guess we kind of have to look at, just getting bearish on the break, which is always tough to do. But if you were to break it, right, maybe something like that, and then, kind of come back to it and then try to short on the rebound, is at least how I would try to do it. But let's say we do get a bounce within the range or even from close to 109 or something. If we do, then you'd be looking at resistance here. All right, hold on, up here. So 110.75 to 111.11, right? 111.11 is the gap from way back when in May of 2019. And 110.75 is a high volume level. It's also going to be the center line of the channel that we were in from the low back in August. Okay. All right, so there's that. Going on to euro. So euro, freaking idiot. This is what you call being a dick for a tick, right? Looking for that final fifth wave in a, when you're looking for a low, and we had all kinds of evidence of a low. We talked about the DeMark weekly buy countdown right on the low, talked about all that stuff. But of course, I tried to be real cute with it and short into that 108.80. At least the stop was tight, whatever. So what are you going to do? So from here, first of all, this chart's really important because we actually have a volatility breakout. This is ATR on the bottom. It's a trend line on ATR, and we broke out today. This is back in 2014, right? From the top, now we're going the other direction, and we broke out today of that trend line on ATR. So point being is that maybe that's it, right? It's very similar, right? Long-term trend line on ATR, long-term trend line on ATR, breakout, breakout, get ATR above 65, which for whatever reason has been like support and resistance for years. And excuse me. And I think you're going to get an explosive move. So looking at where we would want to do this, or how to do this. So here's let's go to a 4-hour chart. So this is the channel from back here. This is January of 2019, so a little over a year ago. Bottomed on that channel, of course. Me being an idiot was looking for like, literally 40 pips lower, 50 pips lower, and then here we are now, 220 pips higher. But if you do pull back from here, I would look at support in this 109.26.45 area or whatever. And Pooja goes, I would have to pull out my CMT books, but that the Kondratiev waves seem to be in play here. Yeah, it's very interesting, actually. I haven't looked at that either, but I will take a look. That's I'd love to discuss that maybe next week. But if you do pull back again, 109.25, 40 or so support. If you don't pull back, I know it's tough, but you know, start to trade higher and you do pull back a little bit, right? Then watch the center line right here at 109.75 for support, right? Or just around there, you know, like something like this, right? Came up here, came back, hit that level, right? So that's what I would watch for if you're not going to get much of a pullback. The next possible pullback area would be up near 110, you know, 60s. It's the 25 line as well as this level here, right? Which is the December 19th low, or sorry, December 22nd low, excuse me. And really the big breakout doesn't even really occur until above 111.73. And at that point, you're looking way higher, excuse me, up towards 117, 118 or something like that, okay? So fear not, there's always ways to enter a market. All right. Looks like dollar yen starting to puke a little bit here. And it is already. So, on here. All right, I got that. Aussie dollar, I really just, I don't know. It's a great looking chart, but it doesn't make a whole lot of sense to me in terms of like, you really think Aussie is going to be ripping face, you know, when we're going into this death spiral and risk? Like chart, fine, probably not going to touch it. Okay, like to see probably a bigger reversal. You know, of course, I'd come up with these indicators, and then we do get an actual signal last Friday, and I don't even follow it on Euro. So, you know, probably be best to wait for something like that on Aussie rather than just try to, you know, guess the low, so to speak. I'll also say here that if we look at Japanese yen futures, we are trading into 2020 VWAP right now, and we're going to probably break above it today based on the very early trading that's happening right now on this new day, which is technically a Friday. Okay, Euro also trading into its VWAP level up here. Okay, so let's put that back here too. 2020. So let's see what happens here with Euro. Okay. Other things to look at, dollar CAD, we are into this trend line here. Again, I have no desire to touch some of these things until we have actual reversal evidence, but this is possible resistance, okay? Obviously something like this will work out if we do get that risk bounce. I can also envision a scenario where you get a big spike up here and the market comes back, right? In a bigger reversal. And here we are in the thin Asian market with dollar yen not doing shit all day. And, you know, in the last hour, we're down 100 pips, so whatever. Market never ceases to amaze. All right, I want to actually show you something else from the post. You're going to have this in a minute anyway when I publish this, but Pooja asking about VWAP. Yeah, let me take. I will take a look at it. Actually, good question. But real quick, some of the other things I wanted to show you. So gold I'm actually looking for gold to trade down to 1607 or so. So you got a wave A down, A, B, C flat, and then I'm looking for a C wave down here into gold, 1607, which is a good spot. Okay, that's where I'd look for support in gold if it's still a buy the dip. Dow futures monthly are going to, we're going to get a monthly volume reversal. We've only had 5 since the inception of, or the advent of Dow, E-mini Dow futures. We had 2 before the financial crisis, which was in July and October of 2007. We had one here in 2012, which did nothing. Then we had one here last October, which preceded the big drop. Not last October, but 18, sorry, preceded the big drop in December of 2018. And then finally, this is the world's largest company, Microsoft, which has actually traded places back and forth with Apple for some time. So, you know, looks like a pretty good bellwether to look at as far as the stock market, right? This is a pretty bearish looking chart to me. This life of stock trend line, if you want to call it that. And we've actually spiked through it this month, and we're about to make a massive bearish candle this month on Microsoft. So yeah. All right, let's look at those VWAPs that Pooja just brought up. Okay. All right, so let's pull these up. Patrick will look at pound dollar for sure. Hold on here, bud. And you are right. Holy moly. I cannot believe it. We are there. So this is VWAP from the low in December 2018 in the S&P, and we're there now. That's pretty crazy. So that makes, to me, that makes it pretty important. Again, we had 2940 as the next level anyway, but here we are. The NASDAQ, it's probably lower, right? It is. So for the NASDAQ, it's a lot lower. It's actually not until 7,900. And we were talking 8167 or so. And, you know, I really do wonder, like, if the NASDAQ is might be the right one to follow at this point, as far as like, you know, the more important one, considering that the majority of the leading companies are tech companies, right? It's just my kind of guess or 2 cents or whatever. You know, it's just speculation, right? I mean, at the end of the day, let's just look at a chart as a chart. Like, you're at a level now, okay, on the S&P. Whether or not it holds, I have no idea. And if it doesn't, then look to the next level, which I would tend to think would be 8167, but you know, based on VWAP, it might be lower, it might be 7,900. So we will see. The big thing is just allowing, if you're going to get a bounce, you know, at all, you know, start to get evidence of bounce, and then we'll see. You know, we'll see where resistance comes in after we get some sort of a reaction. Okay. All right. Pound dollar. So I talked about pound yesterday as far as you're really stuck between a couple levels here. So we've got VWAP off of the low from last September. We changed up to a 4-hour chart. Okay, right here, right? That's where we came into, here and here. And if we get a bounce, which we continue to respect it, we held it again today. You know, I kind of lean towards resistance at this point, but like, doesn't make a lot of sense to me if the dollar's, you know, put in a bigger turn. I mean, I guess cable can do its own thing completely, but that would be not make a ton of sense to me. So the chart remains you know, just completely unclear to me, frankly. Like, either play the breakout above the trend line, which at this point is going to be like 30.20, you know, or sell resistance up into, you know, 29.60s, right? Which again, high volume level. Week open 29.48, which actually was tagged today, and this 29.70 has just been really big for months and months and months. So you get up into there, resistance, you know, and you can try to sell it with a tight stop. Otherwise, play the breakout above 30.20s. Next level down is going to be that wave 4 low, which is 27.69. Okay. Rizwan saying, if long at 29.40, what should be stop and take profit, please? Okay, so first of all, look, I have no crystal ball, right? There is like no evidence of any sort of reversal at this point, right? There just is not. We've had nothing in the way of a reversal. Frankly, you'd probably want to see at least a 4-hour reversal before you did anything, really, you know? And we don't have that. So, you know, I'm not trying, I wouldn't say it might work. It'd be a total gamble. But like, if you did reverse off 29.40, then, you know, first you have to see what it looks like. So first put in a 4-hour reversal or something interesting. All right. And then I would zoom in and look maybe for what the pattern is and see if you could buy, you know, some sort of a dip, right? And then your stop would be against the low. But there really is no risk point right here at all. You just don't have one. Okay. Something that I also find interesting, so is the bond market. Hold on. Check out this chart of TLT. Okay. Long-term target hit today at 153. However, if you look at the actual bond market, so like this is the bonds. So this is a 30-year bond, right? This is from 2000. Your equivalent levels on here is not till you have 175 on the long bond, and then eventually you could go all the way up to 190 something. So I'm looking at the underlying here, whereas, whereas TLT is a derivative, right, which is based mostly on the long bond, but that's what we're looking at. So, all right. You know, you might not get any sort of weakness or bounce in the equity market until you get something up here. I don't know. Or if the market totally crashes, maybe you go 196 on bond futures. And let me see if I have any updates on this here. DSI. So I don't have, excuse me, today's figures. Yesterday's figures, bonds were 85. Aussie was 10 yesterday. Crude was 14. Corn was 11. S&P was 22, NASDAQ was 25. That was yesterday, right? So today they're going to be lower, obviously. So my biggest thing, and I got 3 things that like I'm really watching here close. So $1 yen, okay, 109, big level. That's your breakage level here. If you break down, fine, and then look for a bounce to sell into this. In other words, you want to see this become resistance, okay? That's number 1. If we do bounce from here, great, and then we can look at 110.75 to 111.10 as resistance, all right? Number 2 is euro, as mentioned, that Euro chart. Not that one, this one. Just these. If you pull back, look for support here. If you keep going, resistance 1066, eventually you maybe buy pull back into this level here, right? And number 3 is obviously the stock market, in which things are getting pretty freaking scary out there, and we are looking at either support literally right now at 2940, excuse me, or if that breaks, then you're going to have to look at NDX, and you're going to have to look at probably 8167 at the earliest, and maybe even closer to 7900, because again, that is where you get VWAP off of the December low in futures, okay? Right there. And that is that. So if there are no questions, then I will wrap it up. And if there are questions, then I will take them. That's crazy. Man, this is nuts. Don't tell me, I guess, that stock markets never crash off of highs again, huh? All right. All right, so everyone take care. Be careful. Don't play hero with the trading and all that stuff. And, you know, if you need to trade smaller, you gotta be careful here. You know, FX has been relatively quiet given what's going on, but don't think that's going to happen. Again, the Euro chart that we just showed is pretty interesting, right? So, all right, have a good one. Talk to you guys next week. Bye-bye.